This is podcast of Slow Compounding. Through this podcast, we try to provide you real-time information that is sometimes clouded by market noise. We try to present valuable lessons that may help you to be a better investor. Hope you will enjoy listening to this podcast.
So in stock market, if I've understood it correctly, here in stock market, you're not doing anything. You do not control anything. The only thing that you can do is to take decision. And how you're taking decision, it has immense importance to your investment return. Now, let me give you an example. I'll talk about two of my holdings and then I will tell you how the decision was taken and how we should level our decision and what we can learn from the mistake or whatever a good investment decision that you have made, what we can learn from that and can implement in our own personal investment area. So back in 2020, during the COVID crash, when most of the stocks was collapsing, I bought a stock named Care Rating. I think the price was approximately 280 to 270 rupees. So I bought a good amount of stock I bought for Care Rating. And by the way, I have been investing for, I think, 2018 starting, I have been investing through the direct stock, obviously. And during that time, almost I think in the mid of 2018, I bought another stock, Bajaj Finance. And still I'm holding Bajaj Finance. Soon after the COVID, I think the market kind of rallied with a very short time. And what I've seen is the Care Rating has not moved much. And I found a lot better opportunities, so I sold it. I sold it with a profit. 350 rupees around, I sold it. So I had a little bit of gain. It's not that I lost money over Care Rating. It may look that the decision that I've taken was a good decision. Okay, so let's put it aside and let's talk about Bajaj Finance. Right now also I'm holding Bajaj Finance. Recently I've seen that a lot of market correction has taken place. During the COVID crash also, few units of Bajaj Finance I bought. And I think every year there would be small amount of fall in Bajaj Finance. And when that happens, I typically get to buy few units of Bajaj Finance. Except this fall, right now also the overall market sentiment is down and Bajaj Finance is also down by some amount. But in this fall, I haven't bought Bajaj Finance. And that's a separate matter, so we'll talk about that later. Right now, the market has corrected. Bajaj Finance has fallen. Over the time, I think it's 2018, 19, 20, 21, 22, 23. So over this time, this year is not gone yet. So around 5 years I've been holding Bajaj Finance and it has given me return. Now, how to decide which decision was good and which decision was bad? Because none of the cases I lost money. Both of the cases I made at least some amount of profit. To understand the decision quality, I recently read a book. The name of the book, Thinking in Bets. The author is Annie Duke. This book is an international bestseller and she is a world-class poker player. You can understand she's coming from a background of poker and we are talking about the investing. Obviously, there is some common link because otherwise, there is absolutely no point that we are talking about it, right? So, in the poker and in stock market, one thing remains very, very clear and has very, very common also. Both are probabilistic game because when you are investing in stock market, we really do not know. Most of the time we are investing in future. And whenever we are investing or we are betting on future, this is a probabilistic game. The way we are thinking the future will unfold actually may not, right? So this is a probabilistic game and something similar actually happens in poker. In fact, when I was reading this book, I got interested in poker. I was checking different rules of poker just to understand the probabilistic scenario a little bit better. So in the poker also, every player get 2 cards and then they have to call. So in this case, after you get the 2 cards, more card will follow and you do not know how those cards are going to be. So depending on 2 cards that you have and depending on the other player who are playing in the same game, how they're calling, depending on that, you have to assess the probability and then you have to bet appropriately. So this is the similarities between poker and the stock market. In very simple words, both are probabilistic game. So the way we are taking decision has a lot of importance as we go forward. If your quality of decision is better, let's try to put it in the context. Let's say when you're putting money with a higher probability, it doesn't mean that you will gain or you will win the hand. It will not happen. but the probability is higher. If you continue to do so for longer amount of time, what you will see that small advantage that you are gaining over the time, it will help you to get much better earning, or it will help you give you much better control over your game. It never ensures that in every single game or every single bet you will earn money. No, it doesn't, but it gives you an edge. If you keep playing, the chances of your winning will keep increasing. Now, let's come to the actual cracks of this book. I think I have given you a very long preview of that. So let's come back to the major cracks of this book. So this book actually says that whenever we are taking a decision, the decision, whether it's bad or good, we should not level it based on the outcome. I'll just repeat because it's a very important concept. We should not tag the decision whether it is good or bad depending on its outcome. So if I just put the context that I had done before for both the example that I've taken, care rating, when I bought this and when I sold it, it gave me profit. Now, at what condition that we are taking a decision, that is very, very important, because as I said, investing or betting is a probabilistic game. So when we are investing based on whatever option or alternative that we have, first judge it. And after that, when you understand what all alternative you have, and then you are investing or you are betting on one particular bet. So in this case, as you see, probably during the COVID, you have seen that most of the market were collapsing, and care rating was in a business where they have to rate it. So even though the economic, when the investment was made, already lockdown was in place, so almost there is no people on the road. So one thing that I have understood, that no matter what happens, even though the economy come to a halt, the grading of the different company, the rating of the different company will keep going. Otherwise, it is very difficult for the economy to function. So in this case, this is an absolute need for that moment, right? What other alternative we had? Probably we could invest in many other businesses, but what was the probability that the COVID will not continue for another 1 year or 2 year, or probably for longer time, and that could be just new normal? Nobody knew. So it was a phase of uncertainty that we had to take a decision. So depending on many other factors, considering banks, considering IT, considering capital goods, probably after assessing each and every one, when the investment was made on care rating to find out the most safest position, I think that should be the right way of assessing. Right now, we don't have COVID, or at least the COVID has normalized. Right now, if we just think, we can just say that, okay, the decision was bad. It was just a wrong and bad bet. It's very easy to say because we know that how the future has unfolded. At that time, back in that time, it was impossible for anyone to know it. Everybody was just guessing what could happen. So considering the worst case scenario and the safest bet, still think the care rating, the bet that I made that time, was a good decision. It didn't play out well. Whenever the situation has changed, I didn't see the prospect of care rating, so I quit and I moved to another or next opportunity. Now let's think about Bajaj Finance. Time that I've invested in Bajaj Finance, after that during the COVID, it has fallen a lot, and I have actually added few units around 2000, 2200, 2400. Around that price I have picked up some unit. And if I just think on what basis I was investing and what probability that I was assessing, the thesis that time was during the tough time, let's say the COVID goes for longer time, and if the COVID goes for longer time, what we'll see, the most healthy balance sheet NBFC will do fine. So if the COVID runs for longer time, everyone is going to be impacted. That time, who will stand very well? The one who is the market leader, or who is having the strong footing in the market. So that was kind of the bet. As you see, after 3 to 4 months later, the lockdown has eased and we have seen moratorium notice and many other updates that has happened. But as we have seen the things has unfolded, the dominance of Bajaj Finance will remain. So there is no need to sell it because it was not a COVID specific one. I had been investing, I think, almost 80% of the money that I have invested earlier, and only probably 20% of the money I have put during the COVID. So it was not a particular COVID crash stock. This was the thought process that I had that time. So was it a bad decision to add Bajaj Finance? I don't think so. Again, we'll come back to the point that the book has highlighted. Now we see the result, and then if we judge it whether investing in Bajaj Finance was a good idea, that is not the right way to look at it. 2018, what all other alternative I had? Depending on that, if this one looked the safest case for me, and I have put money, even though today I might have lost a lot of money, that could have been tagged as a good decision. So this is very, very interesting for those who want to understand and improve your decision making. I highly recommend you to read this book, because it is just not tag whether it is your investing or your any other probabilistic game that you're playing, how to judge the decision. And just not only that, how to tag or how to level your decision. This is one part. And then the next part of the book is even more interesting. In that part, it goes much more in depth, and then it explains how you can improve the decision biasness that we have. First thing is, like, I think most of us already know that we are biased. This is the first thing that you have to accept. Now, no matter how rational you becomes, there will be some level of biasness, and the rational people will take conscious effort to reduce that biasness. And this book actually lays down quite a good principle. So I'll not discuss all those things in details. Already this episode is getting longer. So I'll highly recommend this book for you to read, and I am very sure that you will learn a lot from this book. Thanks for listening.